We'll be getting started with today's broadcast in approximately 1 minute or so. Please hold on. Can you hear? Can you get Jim? Yeah, he's on the phone.
The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. Welcome to today's broadcast, and first of all, Happy New Year to everyone. Glad to have you all on today's number 5 DOL Update Webinar, the first one of 2017, and we're very happy to have everybody here today. Hope you had a safe and relaxing weekend, and you're ready to kick things off for the new year. You see the agenda up on the screen, and as we always do, we'll start with some legal updates for today in regards to the DOL. And in that field of DOL legalities, within the past few weeks, have some holidays fall within them. There was not too much new news to report in that area. We are still waiting for an opinion on the case heard in Dallas, Texas a few weeks ago back. As you may recall, many industry experts suggested that this might be the annuity industry's best chance to have the rule changed or derailed, and we are still waiting to hear on that ruling. We'll keep you posted to any news that breaks from the case or any other possible sources of change, such as the incoming Republican administration. If we do see anything or hear anything, we'll let you know. So with today's program, we're going to spend just a few minutes today and talk a little bit about how the Department of Labor fiduciary rule will affect our business and more specifically yours in the future. The DOL rule will affect our entire industry from top to bottom. The home office of these carriers we work with will be affected because they'll have to implement new strategies and operations to assist agents with things that were never needed previously. Products may need to be altered, commissions will need to be reviewed, and of course, underwriting and suitability will be changed from what we know it to be currently. Marketing companies such as URL will also have to change the way we do business. Product recommendations will need to be made with nothing else but the client's best interest at heart. New systems will be needed for documentation, for product recommendation, for the application process. Should we need a best interest contract, which we call the BIC contract, and maybe even for how we pay commissions. So there's a lot to be done by home offices and marketing companies. And despite all these challenges, the biggest impact may be felt by you, the agent. The Department of Labor rule establishes a fiduciary standard for recommending products to IRA customers, which means advisors must always act in the best interest of their clients. Companies are planning to change products and business processes in order to eliminate conflicts of interest and to implement a best interest sales process, and of course to do this efficiently in a way to achieve the compliance that's defined by the DOL. As a result of these modifications, agents should understand that there's 3 major fundamental changes that will be taking place for them come post-DOL. And again, that DOL rule goes into effect on April 10th, 2017. So, although there'll be many changes in the way you do business after the new Department of Labor rule takes effect, 3 of the more major changes are as follows. 1, a potential downward trend on commission. 2, a reduction of the amount and type of products you have to choose from. 3, a much longer and more challenging sales process. And in order for you to have a better understanding of what to expect come April, let's take a closer look at these 3 topics individually. First, the compensation changes. To comply with the DOL rule, agents must put their customers' best interests before their own, and they must provide greater transparency in the product recommendation process. Carriers will adjust compensation plans to minimize or eliminate conflict of interest, and they will share more information about a product's design, the product fees, and the commissions that they pay. They'll share this with the customers. This is a requirement of the rule. They have to do it. So we will start to see more and more products being introduced that will have a 0 commission payment. They will have higher caps and lower fees, but they will offer a 0 commission payment. These products can be used by professionals who are using a fee-for-service business model. Now, please keep in mind that the fee-for-service is not a requirement, and this was made very clear by the Department of Labor. Commission products will still be available. However, carriers will most likely offer these 0 commission products as well as commission products to help add a way for you to eliminate any conflict of interest. Our feeling is that for the most part, commissions on commission products aren't going to change that drastically. A few may be modified downwards, but for the most part, what the carriers are telling us, we probably won't see too much change in the commission area. I don't see any scenarios where the commissions will increase on these products. Okay, the second change agents can expect to see come post-DOL are fewer products from which to choose from. Many carriers are actively narrowing their product offering as we speak, which means fewer products for advisors and agents to sell. Not only will carriers reduce the number of products they offer, marketing companies such as URL will need to decide which products can be eliminated. We have to ask ourselves the questions such as, is there really a need to have 10 different carriers that offer a 5-year, multi-year guarantee product? Do we have to have that in our stable of products and on our shelf? Those are the kind of questions we have to ask ourselves before April. So we'll be sifting through the product mix as well as the carriers to see what we end up with. Although most of the carriers I have spoken to suggest that the majority of their product line will stay intact, there is still some question as to whether high bonus products or longer surrender period products will still be available. Despite the fact that these products might be ones that you use most frequently, a carrier or a marketing company may also act in the best interest of the rule and providing these type of products may not provide what the rule intended. Another possibility you need to be aware of is should your favorite product survive, it may survive without the current commission structure. As you know, higher bonus products and longer surrender period products tend to pay higher commission. And this might not stay that way come April of 2017. The third area that agents need to really be focused on, and will notice a difference come DOL, entails the entire sales process. And this might be the biggest change insurance agents will see, because basically, although we do a lot of this stuff subconsciously, we're not used to documenting and recording it. So in addition to the potential for changes as to what products you might be recommending to qualified IRA customers, the process of how you do this will be totally different. An agent that receives compensation for investment advice in regards to qualified accounts must act as a fiduciary. With this in mind, you must have a consistent and documented process showing how you asked for the critical information about your customer's needs in order to make a recommendation that is in their best interest. So you have to document everything that's basically flowing through your brain. You know, in the past you might have thought, okay, I like this product because of this, and I think it will suit my client's need because of this. Well, now you have to document all that. So you may need some or all of the following technology processes to support your sales approach. Some of that might include product data software. This includes software that summarizes the product features, the performance of the product, and the fees that are in the product, if any. You might need some industry data to support your best sales process. You'll probably need some educational brochures and tools that really delve into the product and how it works, more so than just a normal brochure. You'll need some sales tools that illustrate how the investment recommendation satisfies the client needs and objectives. And then you'll need some customer reporting tools that can be used for periodic customer reviews down the road. So as you can see, there's going to be a lot of changes in how you sell, write, and submit business come 2017. The good news is, for now, finding most of these tools will not be your job. You don't have to go out and do all the research and find the software. That will be our job. With all the change will come an increased need to have a marketing company that is prepared and ready to assist your needs. I can say with certainty that URL is working on your behalf each and every week so that we are totally prepared to provide you with the tools you'll need to be ready to sell annuities come April 10th, 2017. We'll be ready to provide you with the tools and the training that it takes to keep you productive. So in the months to come, as we put our procedures in place, we'll keep you informed as to what is happening and how we will be ready to assist you. Meanwhile, I can't stress enough that there are still many good weeks of annuity sales before you and before the DOL takes effect. And I know that most of you work in your client's best interest, and you'll continue to do that. However, writing business in the first quarter of 2017 will be much, much easier and less cumbersome than it will be from April 10th to the end of the year. So I urge you to close as many sales as possible. Get out there and, you know, if you have something hanging, don't wait. Take care of it now while the process is much, much simpler. So basically that's all I have for you today. We will continue to keep you posted. Thank you for joining us, and feel free to contact me if you would like to discuss any of the thoughts that I shared with you today in more detail. And also don't hesitate to contact myself or my staff in regards to any cases that you're working on. So I look forward to having you join us again in 2 weeks, which will be January 17th, 2017 at 2 p.m. Again, Happy New Year and happy selling. Thank you and goodbye.